if you have a Bitcoin 100 years, it will still be there, perfect durability. You can carry the equivalent of €1 of Bitcoin or the equivalent of $1 billion of Bitcoin in your pocket.
Hello, welcome everybody. Trickle on in. Hey Thomas, how's it going? Can you hear me all right?
Yeah, I can hear you perfectly. Can you hear me?
Oh yeah, you're coming through loud and clear. Welcome.
Fantastic.
Welcome to Moby Media. Welcome, dear audience. We got a pretty cool and special broadcast for you guys today. I got with me Thomas Jeegers. I had the pleasure of meeting Thomas a few weeks ago at a Bitcoin celebration event. We were celebrating 15 years of Bitcoin, and he was a speaker there. And I later found out that he's actually a writer and has a pretty cool background. I'll do a nice little introduction. I'll let you guys know who Thomas is, and then we'll jump straight into it. The name of the book is Understanding Crypto Fundamentals. So he's the author. The book was published June 2023 by Spring Nature. It received some really cool feedback, some really good editorial reviews by best-selling crypto authors such as Phil Champagne, Jack Tatar, and even McLaren. Now, Thomas is someone that's worked in financial services and corporate finance for more than a decade. So he's got multiple certifications in both finance and now in blockchain technology too. He's got 3 master's degrees. He studied economics, computer science, and management. But once he fell into the crypto rabbit hole, I guess he's here to stay now. So I figured let's bring him on. Let's see what his journey's been like, and see what it's like from someone that started as someone skeptical about crypto assets, someone that was a little bit on the fence, to becoming someone that's like really a strong advocate, to the point where he's written a book about it, to the point where he loves to talk about it now, and is really engaged with the whole ecosystem. So without further ado, Thomas, I hope I did you justice by that short intro there. I want us to jump right in. Give us a little bit about your background, and then share with us how your journey's been. Just from being someone that's so and so about the whole crypto revolution, or evolution, as you like to call it, and to becoming a strong advocate. What's that journey been like?
Fantastic. Well, thank you for having me. Sure, my interest into crypto assets, or I should say my interest in a field related to crypto assets, dates back to at least 2011, when I became fascinated by a topic that was relatively unknown at the time, which was complementary currencies or parallel currencies. So it refers to having multiple currencies working in parallel within an economy. It was a breakthrough in the economics literature at the time, because both in theory and in practice, complementary currencies were shown to have a stabilizing impact on economies, and therefore reducing the number of banking crises and currency crises that these economies were facing, and thereby making the economies more resilient to the natural ups and downs of the world economy. So I say this concept is related to crypto assets because these crypto assets that we have today, they very much act like the complementary currencies that economic literature has been.
I think we lost you for a little bit there, Thomas. Can you still hear me?
There we go. Can you hear me now?
Yep. Yeah, sometimes if you get a phone call or messages or something like that, it breaks up for a little bit, but you're back, yeah.
Yep, I think when my phone is turning off. But all right. You hear me perfectly now?
Oh, yeah, we can hear you loud and clear.
Fantastic. So I was saying that the concept of complementary currencies is very much similar to crypto assets, in the sense that crypto assets act like complementary currencies that economic literature has been praising for already several decades. Now, at the time when I was in this topic, I was not even aware of Bitcoin's existence yet. In 2012, for example, I even once held a keynote speech in something like a think tank in Brussels on what complementary currencies could mean for world economies. And at the time, I was waiting for a currency that would be backed by a basket of goods, so a basket of commodities. instead of what I discovered Bitcoin. And I thought I didn't understand it properly. So I thought it was not backed by anything at the time. And I quickly discarded it as not having any fundamental value because I did not really understand the proof of work mechanism and the fact that it's really real energy, real tangible electricity that is backing the Bitcoin currency and its network. So upon graduation from my studies in economics and computer science, I realized that I first had to understand the current monetary and financial system if I wanted to improve it. So I started a career in traditional banking, where I worked for half a decade, specializing in financial risk management. And one of the steps I made during this part of my career is that I became the local expert on blockchain technology already in 2015. So you need to imagine it's before even Ethereum was a thing, and it was fairly early, especially for a traditional bank, to look that closely into this new technology. And I was there at the third largest bank in Germany. And even though I understood Bitcoin a bit better by that time, I was still not convinced. I actually still recall arguing in front of the full risk management board of the bank that $430 per Bitcoin in April 2016, I was telling them it was grossly overpriced. Well, I wish I had invested, but you know what? Maybe I was right, because the risks that Bitcoin was facing at the time were very, very real. Its risk of failure was extremely high. And being risk averse myself, I decided to let go of that opportunity. So then I kept an eye on both Bitcoin and altcoins in the following years. And one by one, I saw the main risks for Bitcoin slide into irrelevance. And as they did, its real economic value compared to its risks kept increasing. And at some point, I decided to dive a lot deeper into the topic and started reading every book I could find on blockchain, on crypto, on Bitcoin. I honestly consumed all the online material I could find, especially looking for people who were against Bitcoin and crypto assets, because I was looking for good arguments on how Bitcoin could still fail. There were many, but then these arguments progressively became irrelevant. You may know of the block size war that happened in 2015 to 2017, when inside of the Bitcoin protocol, people were not agreeing on what Bitcoin was, what it meant, and Bitcoin honestly came very close to dying. At least Bitcoin, as we know it today, came close to dying. Even still in the early 2020s, we had the large majority of the hash rate that was done from China, and therefore it was giving a massive national advantage to China. And if China had played different cards, they could probably have worked in a way to break Bitcoin in some sort, at least, for example, making some transactions blacklisted, some addresses blacklisted, and therefore Bitcoin would be very different from what we know it today. Anyway, possibly due to some luck and due to plenty of people who have been fighting hard in this space over the last decade and a half, Bitcoin today is very different from what it has been in any of the previous 15 years. So I dive deeper on the topic, and as I was researching, I decided to structure my notes as a book, and about 1,000 hours of research into the topic in November 2022, when Bitcoin price was at $16,000. I signed a deal with Springer Nature, one of the largest publishing houses in the world, to publish the book under the title that you mentioned, Understanding Crypto Fundamentals. So the idea was to identify why crypto assets have real economic value in the first place, how to measure this value, and what are the risks surrounding such assets. And the book logically concludes with a focus on Bitcoin. Well, I believe the audience of this show is not predominantly Bitcoiners, but if you are looking for real economic value, you will probably also logically end on Bitcoin yourself and not on any of the altcoins. And I'm really happy to substantiate this statement in the rest of the discussion. But that's probably enough for this introduction.
No, that was great. That was great, Thomas. And I love how you mimic exactly what you get in the book. You know, I've been going through the book. Sadly, I haven't been able to finish it yet, but I've read quite a bit of it. And for everyone listening, you can get it on Amazon. You can get it it's pretty easy to get your hands on it. It's not expensive at all. And the same vibe that you're getting from Thomas now, where he wants to be a little bit thorough, but also break down the story from the beginning, is what happens in the book too. You know, it's not just throwing you into crypto fundamentals and ways you can invest and everything like that. No, it actually breaks down the history of money and value and how everything came to play to the point where we are today. So I love that you mentioned that you even had a period when you were looking for ways that it can fail. So still a little bit on the fence there, but then you really started to see the value, right? So I'd love to learn more about how you saw the value. What is it that what was it that you discovered in BTC? Was it that it is indeed like you mentioned, a parallel currency is a complementary currency, or where does the value come from for you?
All right. To address this, I think we need to take a few steps back, because in investment as elsewhere, people tend to overreact to hypes. So both on the way up and on the way down. And especially in these moments, it is important to step back and ask yourself, why would an investment be valuable in the first place? Why does it have real economic value? And I think people in the crypto space do not ask themselves this question often enough, or not seriously enough. So let me take really a step back. I will start with really some basics on what is Bitcoin. It may seem simple at the beginning, but I think it's absolutely critical it's critical to understand it thoroughly in order to be able to build a proper thesis around Bitcoin and around crypto assets in general. So Bitcoin, at its very core, it is the first crypto asset in the world, and it is enabled by the first public blockchain network. So its function is simple. It enables you to send and receive value to and from anybody in the world using only a computer with an internet connection. But wiring value online already existed before Bitcoin. The revolution here is that you can now do so without relying on a third party to facilitate the transaction. When I send you money through the Bitcoin network, there is no middleman, no company, no bank, no government. So in other words, you do not need to ask for permission to anybody. In this sense, Bitcoin is the first public digital payment infrastructure. Public means here available to everybody, so without any barrier to entry, not owned by any unique entity. So in much the same way the internet was a public infrastructure to send information, Bitcoin is a public infrastructure to send value. And in much the same way we can transact without any third party when using cash in face-to-face transactions, well, now we can do so over the internet, transact without any third party. A concept that seems fairly simple, but took decades to develop in a way that was sustainable and possible, and that has enormous consequences. So before Bitcoin, wiring money over the internet required you to ask your bank, a private commercial entity, to update their ledger for both your account and the recipient's account, debiting one and crediting the other. If the recipient was using a different bank, then several more ledgers had to be updated in between. Now, it would take days to settle, sometimes even weeks, for international payments. With Bitcoin, in contrast, the unique ledger is the public blockchain, and anyone can add a line to that ledger. This is critical. Anyone can do so, regardless of their nationality, race, gender, political opinion, or of any other criterion. Anyone can create a Bitcoin address at no cost and receive value from anybody else at any time, day and night, regardless of weekends or of public holidays. Everyone uses Bitcoin the exact same way as per the exact same rules. In that sense, it is a public infrastructure. I insist on this concept because it is crucial to understand why Bitcoin has value and why it is superior to any other crypto assets or any other monetary asset. So Bitcoin is the first publicly accessible money in the world. Now I'm using the word money. So is it perfect money? Currently, not yet. So clearly not. It is not accepted in many places so far. It is not always a stable store of value over the short term. And it is not yet used as a unit of account, so as a unit to express the price of other assets. It is not perfect yet, the same way, for example, the automobile was far from perfect in the 19th century. At the time, it required many people to maneuver it. It was extremely expensive. It was exploding sometime. But it was still revolutionary. And similarly, Bitcoin has now proved its concept. And this is a real technological breakthrough, having money without an issuer, money without anybody to facilitate the transaction. So a breakthrough that will likely be as positive for the development of humanity as the internet was over the last 30 years or so. Now, Bitcoin is not only working, but it is also improving rapidly. So Bitcoin just turned 15 years old at the beginning of this month, and enormous improvement has been made since its inception. For example, there are now relatively new solutions that enable you to make instant transactions at virtually no cost. So the so-called layer 2 solutions like Lightning or Liquid. And they have the potential to make Bitcoin scalable, which was not the case before. They now enable Bitcoin to really become a medium of transaction at scale. So I talked about how it has the potential to be a public digital infrastructure for payment. But why is that important? Well, the current traditional payment networks, even though they are critical infrastructure, they are owned by private institutions. And these few institutions are increasingly few, increasingly more powerful, and their failures have drastic consequences. Just to give a few examples, data breaches and data leaks have been very common in, well, honestly, since the internet, but even lately. Among the biggest ones, we had in 2018 hackers that broke into the national database of India, and they leaked the personal data of 1.1 billion people. 1.1 billion people, so 1 out of 8 people on the planet. They leak data including names, bank account details, and even biometrics, such as fingerprints. As another example, in April 21, you had Facebook, who made the headlines again with another data breach concerning, this time, 500 million users, including their full name, birthdays, locations, email addresses, and more. And unfortunately, the banking system is not any better. The SWIFT network has relayed countless millions of dollars of fraudulent transactions because of hacked member banks across the world. These frauds and failures of the system have happened because the networks had single points of failure. And this is where we come back to the public digital payment infrastructure. There should not be a single point of failure for any critical infrastructure. Payment and digital payment are clearly critical infrastructure. Unfortunately, they are now full of single points of failure. The internet, similarly, removed single points of failure in communications, and they enabled competition among many information providers. We are now at the same point where technology can finally remove these single points of failures for the payment infrastructure through decentralization. So hundreds of thousands of computers spread all over the world and securing the Bitcoin network. Now, this transition to digital payment infrastructure is essential for humanity. It is essential for many reasons. For example, for the inclusion of billions of people that are currently unbanked or underbanked. So unfortunately, there are about 2 billion people in the world, 1 out of 4 person in the world, that are unbanked or underbanked. So they are too poor or too remote to be interesting targets for banks, or simply they do not own proof of identity. And therefore, they cannot open a bank account. Now, for them, Bitcoin offers for the first time the possibility to save the value of their work in a currency that cannot be confiscated by anybody, especially not by local authorities, but also not by any private institution, and also to save the value of their work in a currency that cannot be debased by a central bank. So for them, Bitcoin is clearly essential. It clearly has enormous value, in some cases, life or death value. But it's not only critical for them, it's also critical for everybody else, because most of the world is suffering from debasement of their currency. So as central banks are printing more and more of the legal tender currency, be it the dollar, the euro, or unfortunately for countries that have weaker currencies, such as in Turkey, Argentina, Lebanon, just to name a few recent examples, these people cannot rely on their local currency to be a store of value. They cannot rely on it to transfer wealth from themselves to their children, let's say in 30 years from now. These people will also all find value in a currency that cannot be debased. So we have now an infrastructure that will enable a new monetary asset to emerge, a reliable asset that is independent from any political agenda, an asset that is provably scarce, that is available at low cost and globally, and offering finality of transaction in a genuinely decentralized way. So it will first become a global store of value and base settlement layer for transaction, and eventually it will be made a medium of transaction, and then in due time probably a unit of account.
I love this this future that you speak of, Thomas. It's really resonating, and for everyone listening, this is the kind of storytelling that you might get from the book as well. So I'm pretty excited. Something that stuck with me when we were having a chat a few weeks ago is you said Bitcoin is freedom. So now I'm going to play a little bit of a devil's advocate here and say, well, if we get some Ethereum maxis or other layer 1 maxis or anything like that, they might say, well, why Bitcoin? Is it just the decentralization? Why is Bitcoin the best candidate? Why is Bitcoin the best candidate to be the store of value, to be the future?
Yep. Brilliant. So indeed, this is a logical question to ask, and I spent countless hours trying to identify why it is the case. So we identify that a public infrastructure for payment is essential in order to remove the single points of failures around this critical function of transferring value digitally. Now, Bitcoin is a tool, and there are countless other crypto assets that are popping up. I think like 20,000 or something at this point. And many of them are offering technological possibilities that Bitcoin cannot offer, or at least possibilities that Bitcoin cannot offer at scale on its base layer. So indeed, the good question is Bitcoin the best candidate at this point? And to answer this, I think we need to dive deeper in the concept of decentralization. So,
I think we lost you for a second there again.
Yep, there we go.
There we go.
Can you hear me?
Yep, you're back now.
So only a decentralized infrastructure can act as a public one. If an infrastructure is centralized, then the central authority can arbitrarily decide to restrict or block access to some participants. So whether it is a good thing or a bad thing to be able to block access to some people, this is a complete different question. But in any case, that would not make the infrastructure public. For example, if Google was owning the internet, they could decide not to make it available to some countries or for some nationalities, or simply to blacklist some individuals, or they could be forced by authorities to do so. And then the internet would no longer be a public infrastructure. Now, as I said, decentralization is essential. However, the concept of decentralization is often misunderstood, and it's actually much more complex than it first seems. The first thing to understand is that decentralization is not an all or nothing feature. It is not that if you are not centralized, then you are decentralized. It's not so easy. It's surely not that if you are using a blockchain, then you are decentralized. Clearly not. So actually, one should rather see decentralization as a continuum going from full centralization to full decentralization. And to be even more specific, it should actually be thought of as multiple axes, each being such a continuum. And these axes would be different types of decentralization. For example, you have wealth decentralization. That is absolutely not the same as decentralization of the decision-making process, which is also not the same as decentralization of nodes securing the network. So some of these characteristics can be rather decentralized and others can be rather centralized for any asset. But they each should be towards the decentralization end of the continuum for the asset to be decentralized enough to be considered a commodity and to therefore even be eligible to becoming a public infrastructure for anything, be it for information or for payment. Now, for instance, in a proof of work process, which is the consensus mechanism of Bitcoin, those who secure the network, the miners, they can, but they do not have to own any Bitcoin. They are also the ones voting on changes of the protocol. Specifically, they vote in the blocks that they are mining. And to mine blocks, they need to have access to cheap electricity. Not only does this access to cheap electricity to mine Bitcoin, not only does it secure the Bitcoin network with real, tangible energy, so with real electricity, but on top, it also incentivizes the network's decision power to spread in the direction of areas of the world where there is exceptionally cheap energy. So typically stranded energy that cannot be used for any other purpose. So there is, in the very design of Bitcoin, there is an incentive to move towards decentralization of the decision-making process of Bitcoin, so of miners. Now, let's put that in contrast with consensus mechanisms based on proof of stake, like Ethereum. Now, you cannot mine blocks of Ethereum without owning and staking the token. So you can already see here how the incentives are drastically different. With a proof of stake mechanism, the more wealth you have in Ether or in whichever asset we are referring to, so the more wealth you have, the more power you have on the network. Because you will mine more blocks if you have more wealth to stake, and therefore you will have more occasions to vote on changes to the protocol. In other words, the richer you are, the more powerful you are on a proof of stake mechanism. And this is a very dangerous governance system that is implemented in the base layer of these protocols. It may work in the short term, but the long-term incentives are wrong. I mean, they are perverse. They are basically centralizing the power in the hands of the rich. So I've heard the arguments from let's say, proof of stake maxis many times, and they will say, yeah, they have built some things on top to try to correct for these mistakes in the base incentives, but it feels like those are patches that are complex, not really thought through, and not. I mean, you cannot really rely on them as much as you can rely on the elegance of the Bitcoin blockchain that has just its base layer, how it's working by definition, that is providing the good game theoretical incentives for decentralization of the decision-making process. Now, for proof of stake, it is actually even worse than what I just mentioned. So it's not only that the concept is flawed in its design, but actually there are even more things. For an asset to be decentralized and therefore to have the potential to become public infrastructure for payment, you cannot have a unique company behind it. Think Ripple or Binance and their corresponding blockchain. So you cannot have this unique company behind it because they can be coerced into changing the protocol, into just making changes that the users would disagree with. They can be forced by authorities to do so, or they can be hacked, as we mentioned earlier. So you cannot have a unique company behind it. You also cannot have a very influential figure behind it, or a foundation that could materially influence the direction of the development of the protocol. So think of Vitalik Buterin in the case of Ethereum, or a foundation like the Ethereum Foundation that has still a large influence on what are the future changes to their corresponding protocol. And actually, Ethereum has proved that it is neither neutral nor decentralized in the infamous incident of the DAO. It was relatively early on in its history, but the Ethereum, sorry, my son is knocking on the door next to me, so it's a bit distracting. But my wife just got him. So in the infamous incident of the DAO, the Ethereum process, the Ethereum blockchain unilaterally decided to hard fork the main chain, which became Ethereum Classic, while the fork kept the original name Ethereum. So in that incident, they clearly showed that when something happened that they disagreed with, they could completely change the history of something that is supposed to be immutable. So if you still believe in the immutability of Ethereum after that has happened, I mean, it's what else do you need? What else do you need as proof that it is not properly decentralized when you see that kind of things happening? And actually, even much more recently than that, you have the merge event in September 2022, when Ethereum switched from a proof of work mechanism to a proof of stake mechanism. So they made such a fundamental change in the structure of their blockchain that Ethereum itself became a fundamentally different instrument. And the reliance on a public infrastructure, on a commodity, is directly dependent on the fact that that it will not change fundamentally what it is or how it works. Bitcoin works fundamentally the same for the past 15 years. There have been upgrades here and there, but there is nothing that has drastically changed. And with every day passing, you are increasing the reliability that you can have on Bitcoin. In contrast, every Web3 startups and new altcoins and Ethereums and the like, every change that they are making to their protocol is just proving to you that it is not something that you can rely on for the long term. There are changes. I'm not saying that they have no value, these platforms or these assets. What I'm saying is they cannot possibly be eligible to become a commodity. They cannot possibly be eligible to become a public infrastructure, something that people can rely on for decades all over the world to save the value of their work and to save their wealth. Now, that was a long discussion on decentralization of the decision-making power. But as I mentioned, there are other types of decentralization. For example, you have decentralization of funds or wealth decentralization. Now, few addresses which much of an asset is a major risk for investor in an asset. So that would be if funds are centralized on an asset. Because if the few addresses that have a very large amount of the funds, if they decide to dump the market, to sell it for anything else, well, that would have a very impactful movement on the price of the asset. And there are actually several metrics to measure this. The two most famous ones are probably the Gini coefficient, that indicates how funds are spread across the different addresses. Another one is the Nakamoto index, which indicates how many addresses or how many people represent the wealth, so 50% of the wealth. So how many of the richest people for an asset do you need in order to accumulate 50% of the wealth of the asset? And to give some numbers to make it more tangible, for Bitcoin, well, data as of 2020, the top 4,652 addresses own 50% of all the Bitcoins. Now, it is a lot more decentralized in that sense, so in terms of funds decentralization, than, for example, fiat currencies, like the dollars. And Bitcoin was also on a steady trend towards more decentralization for the past decade or so, and it's still on that trend. Now, in contrast, let's take a highly centralized asset, for example, Dogecoin. Actually, the top 7 addresses of Dogecoin, they own 44% of all the Dogecoin in existence. So you can imagine if if one or several of these addresses decided to dump their Dogecoin on the market, what kind of impact that would have on the price. And actually, this centralization of Dogecoin is actually trending towards even more centralization. Now, Ether is somewhere between the two. So you have the top 100 addresses on Ethereum, again, data per 2020, the top 100 addresses on the Ethereum blockchain that are owning 35% of all Ethers. And to come back to what I was saying, with the proof of work process, the richer you are, the more assets you have to stake on Ether, and therefore the more rewards you will get, and therefore the richer you will become compared to the rest of the network. So it is not just that it is more centralized, it is that the long-term incentives are also towards more centralization. And the more centralized an asset is, the less you can rely on it for a public infrastructure. You can think about it as if Facebook had its own currency, how much would you rely on this currency? Currency, so Facebook could choose to double the quantity of whichever currency they would have. So they talked about Libra for a while as a currency they wanted to launch. They could be forced by authorities to hand over these tokens, or they could do anything else, making the whole token very questionable. So maybe it could have some value in the short term, but for the long term, it would never become something decentralized enough to become a commodity. And to close this discussion on decentralization, there is only one asset, one crypto asset that is acknowledged by everybody to be decentralized enough to be a commodity. And clearly this is Bitcoin. So if you ask any regulatory authority, especially in the US, you will have each of them agreeing that the only one that is decentralized enough to be a commodity is Bitcoin. Some will pretend that others are decentralized enough to be deemed a commodity, but there is clearly no global agreement on this except for Bitcoin. And if you are a commodity, so an asset without an issuer, you can be eligible to be considered money. Anything else, so any asset that is not decentralized enough, is a security, like a token from Facebook, as I was mentioning. And only if you are a commodity, you can become money and therefore possibly become good money. Now, what we traditionally use as money, so euros, dollars, and so on, do not fulfill properly all the criteria of money. They somewhat fill some of them, but they definitely do not have all of them. Now, let me take a break here to ensure that you are still on
that was
board and
amazing.
to hear more from you.
Yeah, Thomas, I love the way you break it down and make it sound so easy, and it makes it, you make it sound as if we should all just go back to Bitcoin. And my before we move on to what good money is considered to be and how Bitcoin can be good money, I wanted to ask you this: like, do you think of any of these other assets, any of these other L1 tokens or Ethereums and all the other ones? Do you think they'll move back to a more decentralized environment? Do you think they'll sort of walk back these changes that they've made, which pushed them in the other direction of decentralization? Do you think they'll follow the lead of Bitcoin in the coming years and sort of move their way into becoming a commodity themselves, or do you think they're just going to be like happy campers and carry on with whatever it is they're doing right now?
Well, let's think about it. And again, let's take Ethereum as an example. First, let's talk about Bitcoin. What Satoshi Nakamoto did is, after he launched the protocol, he disappeared forever and never came back. So he does not influence the Bitcoin protocol. He does not use the mini Bitcoin that he had accumulated as an early adopter, and therefore left this gift to the world. Now, if for Ethereum we had, let's say, Vitalik and the rest of the Ethereum Foundation giving away all their ethers, or sending them to an unspendable address and disappear and never come back ever, and never influence the Ethereum protocol, so that would be a first step towards making the asset more of a commodity. But even then, you would still not break the perverse incentives behind proof of stake. And unfortunately, most of crypto assets today are on proof of stake. So even in such a utopian scenario where the leaders would just give out their control of the network and give away their tokens, you would still not have what it takes to be a commodity. Now, in addition, so that's to rule out all the proof of stake assets. Now, let's consider proof of work assets. In order for proof of work assets to be properly decentralized, you also need to be resistant to censorship and resistant to attacks. And this is done through the security of the network. In the case of proof of work assets, through through expending energy. And Bitcoin, in this sense, has more than 100 times more security than all the other proof of work crypto assets together. Again, you put all the security of all the other crypto assets together, Bitcoin is 2 orders of magnitude more secure than all of them together. So proof of work is clearly a winner-takes-all competition, in the sense that if, let's say, there was another proof of work asset that could, that had all the perfect characteristics and could arguably be implemented in an even superior way to Bitcoin, let's imagine that happens. Well, if it can be mined using, the network that is mining Bitcoin, well, any large miners on Bitcoin could just attack this new proof of work asset and therefore break it completely. And therefore, no proof of work asset would ever come close to Bitcoin, just because there is such a high security risk, because there is one asset that is so much superior in terms of its security. So not only are all the proof of stake crypto assets not eligible to become proper commodities, proper, public infrastructure for digital payments. But on top, any proof of work crypto asset that is not Bitcoin would also not be eligible. So do I think there is a risk that any other crypto asset takes over? No, clearly not.
I love your determination, and I love the, well, I wouldn't even call it optimism. It's just realism at this point, where you break down the facts and just show, okay, well, it really can't happen. So some of these other chains, or yeah, I don't know what kind of fundamental changes they would have to do, and how much people would actually trust it if they make those changes to sort of try to become a commodity. So you make a very sound case for that. Let's go back to good money. You are starting to sort of explain some of the characteristics of good money, what it means to be good money. Is Bitcoin good money?
All right. So I started earlier discussing the three key functions of money. So store of value, medium of exchange, and unit of account. As I said, Bitcoin is not always reliable in the short term to be a store of value. It is not used at many places yet to be a medium of exchange, and it is clearly not used as a unit of account yet. However, those are the functions of money. What makes money are other characteristics. And actually, even in ancient Greece, you had already Aristotle identifying what is good money. And he was saying that good money should have multiple characteristics. For example, it should be durable. So an asset that is durable, let's say eggs, cannot be good money because you cannot keep them for a month because they would rot and lose their value. So an asset must be durable. In addition, it must be portable. You must be able to carry your wealth around with you in a way that is, that you have an asset that carries sufficient value in a sufficiently small amount of weight, and at the same time, it should also be divisible. If you have just a big gold bar, you cannot buy your breakfast with it because it is way too much worth. So an asset must be durable, portable, divisible, and it must also be fungible. Fungibility means that any unit is the same as any other unit. A diamond is not fungible because a diamond can have a different color, slightly different shape, a different level of purity, and therefore one diamond is not the same as another diamond. A gold coin, if it is properly standardized in size and weight, is fungible in some sense. A euro is fungible. You don't really care whether you have one coin of €1 or another coin of €1 or 2 coins of 50 cents. They are worth the same. They are fungible. Now, I really like the book, The Bullish Case for Bitcoin by Vijay Boyapati, where he actually identifies a few more characteristics for money to be good money. So good money also needs to be verifiable. It needs to be scarce. It needs to have an established history. It needs to be censorship resistant. So I will not dive into each of them because I think they are fairly self-explanatory. But in order to answer your question, so is Bitcoin good money? Let's think about it from a historical perspective. And let's go back in time a few millennia. So for most of the last 5 millennia, gold was a clear winner in terms of what is good money. 1 second. There we go. You still hear me?
Yeah. Loud and clear.
Perfect. So gold was good money everywhere. And so again, most of the last 5 millennia. It won as good money, not because it had a better marketing team than copper or iron or seashells. No, it won because, among other criteria, it was the commodity that was the scarcest, and because creating new units of it was costly. It was more costly than for any other commodity. And this, let's say, costliness of production is what makes it valuable in the first place. Now, let's take, for example, to illustrate that, let's take, for example, copper. So copper rusts. So no amount of copper can be accumulated and stored for a very long time, so that the copper that you can produce in any year will be a relatively large amount compared to all the copper that is in existence and usable. In contrast, gold is chemically almost indestructible, and therefore any gold that has ever been mined is still usable today. So it enabled gold over the last 5 millennia to accumulate to a very, very large stock, while any new amount of gold that is mined in any year is only a tiny fraction of this stock. So that when you store your wealth in gold, you know that any new gold that will come in the market will not double the quantity of gold existing. It will only be a tiny fraction of what is in existence. This concept was popularized by the book The Bitcoin Standard by Saifedean Ammous, where he also indicates that since the Second World War, there was not a single year where the amount of gold that was mined corresponded to more than 1.5% of the total amount of gold in existence. I think 1.5 or 2%, something like that. So even when the price of gold skyrocketed, as it has done a few times in the last half century or so, it is very expensive for people to mine new gold. And therefore it makes, because the production needs energy and resources and capital, and therefore gold will maintain its scarcity. So gold became money by definition because it was more scarce than any other commodity. Now, Bitcoin shares similar attribute to gold, in particular this costliness of production. If you want to mine a new Bitcoin, you need to spend a very large amount of electricity, of something very real and very tangible. It is costly, the same way it is costly for gold. And actually the relationship between how much it costs you to produce a new unit and how many units there are in existence, so far gold is still superior to Bitcoin. But that will change very soon. In actually less than 3 months, we will have the fourth halving of the Bitcoin supply. And this will be probably the most significant halving of all time, because for the first time in humanity's history, you will have an asset that will become scarcer in terms of production. So you can measure that with the stock to flow ratio. So the amount of new Bitcoin mined in a day compared to the total quantity of Bitcoin in existence. So this ratio will make the asset Bitcoin more scarce than the corresponding ratio for gold. And in this sense, the only thing that, well, one of the two things that gold had for being better money than Bitcoin will actually switch, so that Bitcoin will become superior in this respect to gold. The other characteristics of what is making good money. So durability. Well, if you have a Bitcoin, you can use it today, next week, next year, in 10 years, in 100 years, it will still be there. It does not rot. It does not rust. So it has perfect durability. Now, portability. You can carry the equivalent of €1 of Bitcoin, or the equivalent of $1 billion of Bitcoin in your pocket, or even in your mind. Just by knowing the 12 words of your seed phrase, you can carry your entire Bitcoin wallet with you. So it is the ultimate level of portability. Now, in terms of divisibility, so as you know, a Bitcoin can be divided into 100 million subunits called Satoshis. So 100 million Satoshis is one Bitcoin. The same way 100 cents is $1, or 100 cents is €1. So it is very, very divisible. And actually, with layer 2 solutions, you could even subdivide Satoshis further, so it has actually infinite divisibility. To the extent that Bitcoin is censorship resistant, Bitcoin also has perfect fungibility. I'm saying to the extent that it is censorship resistant. If in the future any bad development make it that a Bitcoin that was used for any specific use, let's say that a Bitcoin has been used in North Korea for anything and then is transferred somewhere else, and if people start to identify, oh, this Bitcoin is actually, a bad Bitcoin, then it would lose somewhat the characteristics of fungibility. I want to mention that, even though I'm not sure this is ultra relevant, because you will always find people who will want to buy these Bitcoins, and there are ways to reduce the traceability and therefore to increase the fungibility of Bitcoin. So Bitcoin is ultimately durable, ultimately portable, ultimately divisible. It has extremely high degree of fungibility, more so than for basically any other asset. It is clearly verifiable. Actually, you can verify your Bitcoin instantly at no cost on the Bitcoin blockchain, just by having access to internet. It is much more verifiable than, let's say, even a dollar bill or a gold coin, because in the gold coin you could have a different material. Bitcoin also has perfect scarcity, something that humanity has never seen before. So we know that there will never ever be more than 21 million Bitcoin. And the last criteria that I wanted to mention is in terms of established history. So it does not have the history of gold, clearly. It does not even have, decades of existence. However, Bitcoin has worked for 15 years now. In particular, it has worked for more than a decade without any second of downtime, available any second of the last decade and more, and counting. And now that its market capitalization is closing $1 trillion, you have more and more people that want, or over the last 15 years already, that have tried to break the Bitcoin blockchain, because that would be an obvious gain if you manage to break the chain or to hack an address. But with every day passing, and every day that nobody in the world manages to do that, despite the fact that it is worth $1 trillion in total, you create a history that is even more established, a history that's even stronger, and therefore you are giving even more credibility to the Bitcoin blockchain. So for all the attributes that I mentioned, you have the ultimate asset in terms of established history. You have an asset in the making that so far has already proved its concept, and that is likely to continue to be to prove that it can and does work, despite all people trying to get to attack the Bitcoin blockchain. So in this sense, the long answer for easy question: what are characteristics of good money, and is Bitcoin good money? Well, Bitcoin is the best money that humanity has ever had. Also, Bitcoin is for the first time money by design. It was designed, it was not found. Gold was found, and we try to improve its standardization, its weight, and so on. But it was not perfect because it was not designed. Bitcoin for the first time is designed perfect money. The best money that we have ever had, and possibly the best money that humanity will ever have in its existence.
Well, Thomas, I got to say, we need more people like you, not just to break it down, but to have your conviction and to actually point to exactly what it makes it good, to exactly what it makes it distinguished from what we had, exactly what it will make it durable, and what will make people want to have it, want people to use it, and keep it for as a store of value, and everything that's great about Bitcoin. So really cool breakdowns. I've had some requests from people to come up, so I want to pass the mic for a few questions from people from the audience, if that's okay with you. I have a few
Of
questions of
course.
my own, but since requests were coming up, I figured we mix it up a little bit. I think Aisha was the first one to come up, and she has her hand up. Aisha, you have a question here for Thomas. Go for it.
Yeah, okay, thank you. I have been listening. I found it really insightful. Okay, I have a few questions for Thomas. Okay, as someone who has changed residence 12 times since Bitcoin's inception, how has your exposure to diverse regulatory environments shaped your perspective on the regulatory challenges and opportunities facing the crypto industry on a global scale? And considering the evolving regulatory landscape for crypto assets, how do you see government interventions impacting the future of these assets?
All right. So regulations are not bad per se. Regulation have the objectives of being good, and they can be good if they are light touched and if they are indeed promoting innovation in the space. So there are some elements of regulation that will be beneficial in the Bitcoin and especially in the crypto asset space. Also because it is a space that is full of scams and full of people who are trying to take advantage of the fact that many people do not understand it yet. So some regulations to protect investors will be useful. For example, if you want to have custody of other people's Bitcoin, like some exchanges are doing, well, you need to be able to prove that you indeed have the Bitcoin underlying. You need to be transparent. You need to show your security framework. You need to indicate how trustworthy you are. I think this is very useful regulation. Now, there are also some pieces of regulations that are completely pointless. For example, in the US, you have recently Senator Elizabeth Warren that is suggesting to make any unhosted wallet basically banned. So you need to imagine that if you are a hardware wallet provider, it would mean that you need to have all the details on all the potential users or all the ultimate users of your wallet. To make a comparison to the physical space, is as if the producer of a physical wallet, a leather wallet that you have in your pocket, as if that producers would need to have information on who would put money, so bills, in the wallet, and would be able to prevent some people from using this wallet. It is not only completely infeasible in practice, but the thinking behind it is just completely flawed. So there needs to be good regulation, so light touch, knowledgeable regulation on the space. Luckily, we have, or actually in the US, they have several groups that are making very good progress on informing politicians and regulators on the benefits of Bitcoin and on what kind of regulation would make sense. You have, for example, the Satoshi Action Fund or Coin Center, which are two nonprofits that are doing great stuff, extremely qualitative content, and that are promoting how quality regulation could happen for the Bitcoin space. With this, I hope I answered your question. Feel free to let me know if there's an aspect that I haven't covered.
You answered my question. Okay, you mentioned that Bitcoin shares fundamental characteristics with gold. And while gold presently holds a superior position, you anticipate that Bitcoin will surpass gold in the future, right? Considering Bitcoin's significant decline during the March 2023 bank runs and the March 2020 pandemic panic, while the S&P 500 lost a third of its value and gold fell by 6%, How do you reconcile this with the narrative of Bitcoin as a crisis-resistant store of value?
Yep. All right. So Bitcoin has a market capitalization that is still relatively small compared to traditional assets. So Bitcoin has, I will round numbers. Let's say roughly $1 trillion capitalization. Gold, in contrast, is roughly $10 million. It's actually a bit more, but let's round numbers to make them simple. And the stock market, again, rounding, is roughly $100 trillion. When you remove, let's say, 1 billion from stocks, it is invisible. Nobody notices. When you remove 1 billion from gold, it is very, very small. When you remove 1 billion from Bitcoin, it is visible. And unfortunately, the Bitcoin space is still relatively immature in the sense that we are extremely early and most investors do not really know what they are investing in. To make my point on this, I'm just taking the market capitalization of Bitcoin. If people understood Bitcoin, they would understand that if you take every characteristic that makes gold valuable, well, Bitcoin is superior to it in every respect, except maybe the longevity of its established history. But this would suggest that the market capitalization of Bitcoin should be at least that of gold and most likely largely superior. And in practice, it's only not even 10% of the market cap of gold. So how do I reconcile the fact that Bitcoin has dropped rather steeply in the last bear market? Well, because they are big investors that removed, or many investors that removed a lot of money at once, and this has a large impact on an asset that still has relatively low liquidity and a relatively small market capitalization. However, if you look at each bull and bear market that we have gone through, every time liquidity has increased and market capitalization has increased, every drop has been of less importance. First it was decreasing by 90% and then decreasing by only 80-something% and then only 70%. And it is likely that in the future, well, there will still be volatility, most likely more volatility than for traditional investments. However, this volatility has been trending downwards steadily for the past decade or so, and everything indicates that it will keep decreasing in the future.
All right, that makes sense. Okay. Okay, how do you view the influence of major institutional players like BlackRock in shaping the narrative around Bitcoin, and what impact might it have on investors' sentiments and market dynamics?
Yep, brilliant. Actually, I published an article on Bitcoin Magazine in December on this topic. So you have major financial players. You mentioned BlackRock, so the biggest investment fund in the world, that until a couple of years ago, they were saying Bitcoin is a scam, Bitcoin is a Ponzi scheme, Bitcoin is money for criminal, you should ban it, and this kind of narrative. So you can imagine that most people who do not know anything about it would not consider it seriously. Now, since summer last year, the narrative has changed like as much as it can possibly change. It was a 180-degree change. Now you have Larry Fink from BlackRock, but also others that are saying Bitcoin is a digital gold. The increase in price of Bitcoin is a flight to safety. We believe in Bitcoin. Our clients want Bitcoin. Bitcoin is a hedge against monetary debasement. Now that they are offering Bitcoin ETFs, it makes it available for millions of additional investors that would have never hold their private key anyway. So you increase the base of potential investors, you change drastically the narrative, especially because now you have 10 big institutions that are allowed and that do make public commercials about Bitcoin, while in the past 15 years, they were actively working against it. So saying as things as bad as you can possibly imagine, even though these things were provably wrong and provably inaccurate. So I think that this is not a small change. I think that this is one of the biggest change in the history of Bitcoin. The fact that we went from an asset in the shadow to an asset that is adopted by all the big financial players in the world. An asset that is not only adopted, but even actively promoted and advertised by the biggest investment managers in the world. I think this is enormous, and it is absolutely not priced in any way yet.
Understood. A big thank you for sharing your expertise and answering my questions. Your thoughtful responses have provided me with deeper understanding. Thank you. Thank you so much.
Yeah, thank you for the questions and for the interest.
Thank you for the questions there, Aisha. I think next was Rahmat that had his hand up. Rahmat, you have a question here for Thomas? Go for it, sir.
Yeah, thank you, Akti. Okay, I was thinking dealing with market volatility, especially in crypto, and unexpected reactions can be emotionally draining. So I was wondering, how do you manage the psychological aspect of investing in Bitcoin or any other cryptocurrencies, especially during the bear markets or the sudden drops?
Yep. Indeed, it's difficult for a lot of people to keep conviction in an asset when they see that their account has lost, I don't know, 70% of its value or something. Now, the whole idea behind Bitcoin, or my whole thesis behind Bitcoin, is that it has fundamental value. It has real economic value. So my thesis will, so according to me, it will come to fruition eventually, whether it is in a year, in 3 years, in 10 years, or in 20 years, I cannot say with certitude. But I have looked for every reason how Bitcoin could fail. I could not find any relevant argument. I have looked for every reason why Bitcoin could have value, and that's what I've tried to present to you today. And in the book, I'm also presenting 10 different valuation methods for Bitcoin that suggest a very, very optimistic outlook for the coming decade and beyond. So, I was buying when Bitcoin was at 50,000. I was buying when it was at 40, and then at 30, and then at 20, and at 16, and I was buying all the way up. And I will keep buying when Bitcoin will be at 50,000 again, and I will keep buying when it will be at 100,000, and I will keep buying when it will be at 1 million, because there is no asset that is superior to Bitcoin. There is no better way to save my money. Whether I'm holding 1 Satoshi or 1 million Satoshi, it is a better way of storing wealth than keeping it in, be it gold or stocks or definitely of fiat currencies. So how do you manage psychologically to go through that? Well, just try to understand the basics. Why does it have value? And then have a long-term view. If you can weather the short-term volatility, then you shouldn't be afraid of the future. Quite the opposite.
Got it, got it. Okay, I was going through an article of a Wall Street Journal by James McIntosh, which stated that the new wave of the US Bitcoin ETF may undermine the original purpose of the Bitcoin. So I was wondering, how do you see the role of Bitcoin evolving with introduction of the ETFs, and what impacts might this have on the long-term value of cryptocurrencies in general and the Bitcoin?
So let's think about the ETF. An exchange traded fund makes Bitcoin an investable asset for people directly from traditional investment funds. So from their pension fund, for example, or from other, let's say, for family offices and for other companies, it is easy now to invest in Bitcoin, or to have an exposure to Bitcoin, to be more precise, without having to go through holding the asset yourself, how do you self-custody the asset, and so on, which, let's be honest, is not straightforward. And there are some people who would never, ever go through the hassle of self-custody of assets. All the generation that is now going to retirement, only extremely few of them would even consider having Bitcoin self-custody. The generation below, let's say 30 years old or so, for them, it seems a lot more straightforward because they were born with digital asset. It does not seem so foreign to them. To the people who were born, to the people who are less than 30 years old today, Bitcoin has existed since they are teenagers. For them, it has been there forever. It's like for people who are 40 today, the internet has been there almost forever. So it's not new, it's not weird, it's not alternative, it is the standard. Now, ETFs offers something for people who do not belong to this category. Is it good to have funds centralized in the hands of few institutions? Well, as long as it remains relatively small, and as long as the legal ownership of Bitcoin is still to the ultimate person, so to the ultimate investor, not to the custodian, so not to the BlackRock and so on, I think it's not a big issue. But again, as Aisha was mentioning in her question, the narrative change is probably what will create the biggest change here. Not the fact that you have ETFs, but the fact that it is now legally recognized as something okay to hold. It is not, a weird magic internet money. It is not an asset for criminal. It is a reliable financial asset available on Wall Street and available in pension funds for everybody through across the world. So I think that it's a good development, all in all, for comparing to where we are in the history of Bitcoin.
Understood. It's been really nice talking to you, and thank you so much for your time. Over to you, Akti.
Yeah. Thank you for your interest.
Thank you, Rahman, for the question. Next up, I think we have Mr. Captain Levi. He has his hand up. Captain, you have a question for Thomas here?
Yeah, thanks, Akti. Hi, Thomas. First off, your book, Understanding the Bitcoin, it's worth the read, and it's definitely worth every penny spent to acquire it. It's a really impressive and detailed explanation about the history. I actually enjoyed the illustration you put there regarding rice stones. It's quite impressive, I must say. The question I have, based on what you've talked about so far, is the fact that let's see, government policies. Government likes to be the one in charge, and they do not like it if anything coming from either them or outside tarnishes that image that they put. Government knows that if they set prices for inflation and deflation, they will still be the one in control of whatever amount of money that's printed, and they can regulate everything themselves. But Bitcoin happens to now seems to usurp that power that they put, and they saw it as a threat. But now there seems to be a turnaround regarding government and its economic policies, especially related to digital currencies and blockchain technology in general. What do you think that is causing this shift? And from what I've heard you saying so far, you're really optimistic about Bitcoin and its tech. But do you think that the government will fully embrace it and integrate it into the economic policies?
Okay. First of all, thank you very much for the good things you said about the book. Now, what you refer to is what I call governmental risk, and this risk was actually very sizable for many years. Indeed, in the, let's say, first 5 to 7 years of existence of Bitcoin, if major governments, let's say US, China, or the EU overall, had tried to break Bitcoin or to make it so that it's not, censorship resistant, they probably could have managed to do something about it. Well, Possibly, at least. We will never know. But in any case, now we are way past that point. The likelihood of Bitcoin being attackable, the possibility of Bitcoin being attackable by a major government is just completely gone. It's completely impossible. To illustrate that, let me make a parallel to the war on drug. So for many decades, governments across the world have been making a war against heroin, cocaine, and so on. And producing these drugs is actually a very complex process. You need to have specialized farming. You need to ship the drug internationally. You need, it's a very complex supply chain. You even need to do some marketing of the product to ultimate users. And nevertheless, it's still possible to get these drugs almost at any corner of any street in any major city across the world. If governments were able to stop the supply chain of these drugs at any point in the process, these drugs would not be available. And we have seen over the years how they are completely unable to do so. And if they are unable to stop something, let's say, comparatively easy to stop, well, they will be completely unable to stop Bitcoin from propagating. You need to imagine that Bitcoin propagating over the network is nothing more than about 1 megabyte of information shared every 10 minutes on the internet. So you cannot stop that, nothing short of stopping the internet everywhere at the same time worldwide. And even then, as long as two computers stay connected to each other, the Bitcoin blockchain can continue. So if governments have been unable to successfully drive their war on drug, they will be completely unable, even more so, to prevent Bitcoin from propagating. So that's the first thing. It's impossible for them technically to do so. And actually, we even have a case in point that proves this. China, well, a rather powerful government that is rather strict on some topics, have banned Bitcoin multiple times. They have banned Bitcoin. So owning Bitcoin, trading Bitcoin, mining Bitcoin. And as a result, they managed to prevent none of that. Bitcoin is still mined in China. Bitcoin is still owned by people in China. And Bitcoin is still traded in and out of China. So they have been completely unable to do that. As Jason Lowery, the author of the book Software, is saying, you cannot ban Bitcoin. All you can do is ban yourself from profiting from Bitcoin. And I think that's where the governments today are. They notice it's completely impossible to ban it. They cannot stop this. So the best they can do is embrace it and try to benefit from it. There's also another parallel that I really liked. That one was done by Saifedean Ammous, from the author of the Bitcoin Standard. He was comparing Bitcoin to gunpowder. When you had Germany and France at war, imagine that Germany was having gunpowder and France wasn't. Well, if France was saying, oh, we don't like it, we prefer to fight with sticks and stones and shields and swords, well, it doesn't matter what they think about it. If they were trying that, well, the power, in this case Germany, with gunpowder would have just invaded France and replaced their government, and then they would have had gunpowder. So adopting gunpowder was not optional. Either you adopt it and you have a chance to fight back, or you don't adopt it, and then those who adopt it, they will put you out of your misery. They will take over. So Bitcoin adoption in this sense is not optional. It will happen no matter what government think about it. If they try to ban it, all they can do is ban themselves from using it and therefore lose in the process.
I really appreciate this analogy. It's definitely something to think about. I also usually say one thing. One of my favorite shows, actually, one of the characters there made mention of the fact that technology levels the playing ground for everyone, and by everyone I mean even the governments themselves. And it's really great. As an advocate, I'm also optimistic on Bitcoin, and it's always thrilling to see fellow advocates for Bitcoin and its technologies as well. Thanks a lot for your insights, and looking forward to hearing from you here on Moby Media Space some other time. Thanks again. Over to you, Arti.
Thank you for the questions.
Thank you. Thank you, Captain Levi. I think up next we have Mr. Mark here on the mic. Go for it, Mike.
Okay, thank you. Hello, Thomas. I appreciate your valuable insights today. Um, so my question is, what guidance would you offer an individual re-entering the cryptocurrency market, especially someone who's faced previous losses with Bitcoin, but also still remains optimistic about the technology's future? So that's kind of where I'm a little bit stuck into getting back into the market. And just real quickly, additionally, do you foresee a potential improvement in market stability down the line?
Okay. So if you have faced losses with Bitcoin, just means you have bought in the relatively short period of time in 2021, where Bitcoin was above its current price of, 43,000 today, if I'm not mistaken. And again, it does not matter. I've also bought some Bitcoin at some fraction of a Bitcoin at price higher than that, and I've bought some other fractions of Bitcoin at price lower than that. What is important here is to play the long game. It doesn't matter if it's volatile in the short run. This is what Bitcoin does, especially because of its relatively low market capitalization, so that when there is a hype, people tend to overreact to the hype, and you have plenty of people who have no idea what they are doing, who are putting some money in, and as soon as it starts dropping, they have no idea why, and they just start removing their money. And therefore, it causes the ups and downs of Bitcoin. So play the long game, buy some sats, don't look at the price. One Bitcoin will still be worth one Bitcoin today and in 100 years as well. So the price of Bitcoin in euros or in dollars or in whatever does not really matter over the long term. So that's on your first question. Now, do I see the market stabilizing in the future? Well, let's look at financial metrics. You have two things happening. First, the liquidity is increasing for Bitcoin. Therefore, the market is more and more able to absorb liquidity shocks. And we have seen that over the past weeks when Grayscale sold a very, very large amount of Bitcoin. I don't have the exact number in mind. Selling such a high amount would have had a drastically larger effect in the past years. But the fact that there are so many people nowadays willing to buy these Bitcoins that were sold indicates that you have a much higher level of liquidity, and therefore the volatility of Bitcoin is very, very low, well, comparatively lower than what it was in the past. Still, obviously, much higher than the traditional investment like gold or even a diversified stock index. Now, another development is that Bitcoin is decoupling from traditional investment. What I mean with that is that the correlation between Bitcoin and traditional investment is becoming lower and even negative in some instances, meaning that a traditional investor who would hold, let's say, 60% of its portfolio in stocks and 40% in bonds, the fact that now there's a new asset, an alternative asset class that has a low level of correlation, it is beneficial for this investor to invest a part of its portfolio in this low correlated asset, because it will increase the expected return of its total portfolio while reducing the total volatility of the portfolio, just through the fact that this additional asset has a low correlation to the existing portfolio. With these developments, you have investment managers worldwide that will not only have the willingness to invest in Bitcoin, but even the fiduciary duty to invest in Bitcoin, because they have the fiduciary duty to act in the best interest of their investors. And the only wrong allocation to Bitcoin is 0%. Now that this, now that the narrative is, let's say, it's clear, now that it's officially a commodity, now that it's, properly regulated, now that, all big financial institutions are on board, these investors cannot not invest in Bitcoin anymore. They will put in some money into it, and therefore the liquidity will increase like multiple orders of magnitude. So I expect a very clear stabilization. So I think the volatility of Bitcoin will drop drastically over the coming weeks and months and years.
Thank you so much for that information, and also just to boost my feeling towards investing in it. Thank you so much.
My pleasure.
Thank you, Mark, for the question coming up. Also, we got one last speaker here. I believe Mr. Venice. Venice, you had a question for Thomas? Go for it.
Yeah, actually, thank you so much, Thomas. I really enjoyed the presentation. And considering your emphasis on Bitcoin's resistance to censorship and its decentralized nature, I'm curious about your perspective on recent regulatory developments. Turkey's Personal Data Protection Authority now requires the crypto platforms to collect users' identity and photo information for anti-money laundering compliance. So how do you see this regulation impacting the privacy concerns of crypto users in Turkey? And do you think such regulations pose a challenge to the fundamental principles of privacy and decentralization that Bitcoin and other cryptocurrencies aim to uphold?
Okay. So first, let's address whether these regulations make sense in the first place. So you have Bitcoin that is a tool. The same way a hammer is a tool. You can use a hammer to build some great stuff. You can build schools with a hammer. You can also kill somebody with a hammer. What is to blame if you do that is not the hammer in itself. It's not the hammer that is at fault if you kill somebody with a hammer. It's the person using it. Now, Bitcoin is similar in this respect. It is not because Bitcoin can, in theory, be used for illegitimate purposes that Bitcoin is to blame. What is to blame is the people doing these illegitimate purposes. So that's the first point on the fact that Bitcoin is not the right point of attack for this legislation. So they are flawed in their approach to the problem at all. Now, the second thing to say is that actually the Bitcoin blockchain is a public ledger of information. Any transaction that you ever made and that you will ever make on the Bitcoin blockchain is available to anybody in the world with an internet connection so live. Anybody can see the full existence of any unit, so any unit and any fraction of Bitcoin since its inception. If you were to do something illegal, the worst idea in the world for doing that would be to use the Bitcoin blockchain. If you want to do something illegal, don't use a ledger that is public with transactions that are permanently recorded. If you want to do something illegitimate, use cash, not something public. So this logic anti-incentive for using Bitcoin for illegal purposes is why the quantity of Bitcoin transactions that are used for illegitimate purposes is so low compared to traditional currencies like the US dollar. And not just in total amount, but also in percentage. So there are studies published every year. I even quote some in my book, indicating that the quantity of Bitcoin used for illegitimate purposes. I think the latest figure for 2023 was like 0.23%, something like that. While for the fiat industry, it's estimated to be between 2 and 5% of transaction, so more than 10 times as high in percentage term for the traditional system. So if you are a regulator, Bitcoin is the least of your worry if you would try to prevent illicit transaction, and B, it's not even meaningful to attack the medium of transfer. The same way it would not be meaningful to say now it's forbidden to use hammers because you can kill somebody with a hammer. It's just a flawed thinking. So that's my stance on these regulations.
Yeah, Thomas, I just wanted to take a moment to express my gratitude for the incredibly insightful and thought-provoking hour we have spent listening to your perspectives on Bitcoin and the examples you just provided and your ability to break down complex concepts and provide a clear understanding of Bitcoin's fundamentals is truly commendable. Thank you for addressing my question as well. And thank you, Thomas, for sharing your time and knowledge with us today.
Thank you very much for the question and your interest.
Thank you, everyone for the questions here. We're nearing the end here. We got about 5 minutes left before we have to pass it over to some of our friends from Blocks Media. We got another cool broadcast coming for you in about 20 minutes or so. But while we're still here, Thomas, I hope you enjoyed the broadcast so far. And I wanted to ask you if there's anything that maybe we haven't touched on, something that's near and dear to you, something that you feel is super important to highlight that I might have missed. What would that be when it comes to either crypto or Bitcoin or finance or anything related?
I actually think that we have covered quite a lot of important topics. Bitcoin is an absolutely fascinating one. I understand people in the crypto space thinking, "Oh, Bitcoin is boring. All it does is, transfer transaction from A to B, and that's it." And so I get this, but it's also why it is valuable, because it is boring and reliable and the same for a long time. So for anybody, especially for investors in crypto assets, I think it is important that you keep in mind why it is valuable. Don't just jump on the latest dog coin that is going up because another YouTuber said that it's going up. It does not has any real value, and it will not have, no matter what other people are saying. It is playing the casino. Well, if you like playing the casino, well, be my guest, but remember that the odds are against you. Now, if you want to invest and save money for your children or for your retirement, well, considering Bitcoin is much more meaningful than considering any other crypto asset. And again, I'm not saying that everything has been solved for Bitcoin. There are still challenges in front of Bitcoin. There are still risks. I thought I could highlight some of the risk in my book, but also highlight the fact that many of the risks that are often mentioned are no longer or not relevant at all. So please invest responsibly. Don't put all your money into anything. Make sure that you can weather the volatility, because it's still going to be volatile, and you are still going to see, like the week before last, when Bitcoin dropped, what was it, 15% or so, even though it recovered most of that in the meantime. So you are still going to see volatility. And if you need liquidity in the short term, it is not a reliable short-term store of value yet. This being said, please learn about Bitcoin as much as you want. Don't say to people, buy Bitcoin. Say to people, learn about Bitcoin. There are so many things great about it. We did not even touch on plenty of the humanitarian things that Bitcoin is bringing. So I briefly mentioned banking the unbanked, but there are so many other things. So bringing even electricity to people in the world who do not have access. There are Bitcoin is probably one of the best technologies we have in order to promote the use of renewable energy, in order to reduce our reliance on intermittent sources of energy. So please learn about Bitcoin and convey the word to people to learn about Bitcoin. That's probably the best words I can finish this talk with.
Thank you so much, Thomas. Thank you for being here with us. I really appreciate you taking the time, and perhaps after the halvening or even before, maybe we'll do this again. Maybe we'll touch on some of the other topics. Again, guys, if you wanna order the book yourself, just do a Google search, "Understanding Crypto Fundamentals." There's quite a lot more topics, like Thomas was just mentioning. There's reflections on his career. If you want to learn more about him, there's a lot of personal insights and some predictions there. He goes into the ethics of it and a lot more regulatory considerations. There's coverage of the impact of traditional finance. He goes over valuation methods. So there's quite a lot that we couldn't go over in this broadcast. So I'm hoping I'll get Thomas back in the future and we can dive a little deeper then. And I want to read something, just a short two sentences from the book that I loved and I marked down, and it goes like this. Bitcoin is the logical next milestone in the development of a global society's monetary and financial system. It is not a revolution, but rather an evolution, the next natural step in the history of money and finance. This really resonated with me, and as Thomas said, nothing we talk about on these broadcasts is meant as financial advice, but rather as education. So go out there, get yourself educated, learn a little bit more about the ecosystem that's ever evolving, and see how you can even profit from it a little bit. So once again, Thomas, thank you for your time. Thank you for being here. I had a great time. I hope you enjoyed your stay here at Moby Media, and I hope to see you again in the future.
Well, thank you for having me. That was great.